welcome to 2026. 2025 has officially closed. Law firm owners and managers know that the year-end financial close is a big one, right? It's the most critical, probably the most stressful, and for us as bookkeeping professionals, it's the most stressful one of process of the year. And we should have been doing things along the way to get ready for today's date. This should not be, we don't look at anything, we just pump the data in and never look back at it. This should be something ongoing that your bookkeeper is looking at minimally monthly. But it's not just about closing the books, it's about ensuring accuracy, compliance, and gaining insights for the future. Today, I'm going to walk you through why this matters for law firms, the key steps, the common challenges, and the best practices, and how technology can make it the whole process smoother. By the end, you'll have actionable tips to streamline your bookkeeping reconciliation. Let's dive in. Accurate bookkeeping is the foundation of your law firm's financial health. It helps manage cash flow, ensures that you have funds for operations and client obligations, and most importantly, it keeps you compliant and you adhere to the strict regulations of client funds with your local bar. That's really important. Any mistakes can lead to serious legal issues. Plus, precise records maximize your tax deductions. So it'll minimize liabilities. I've seen some books with law firms that they come to us and a tax return was filed on this date, or this is, we affectionately call garbage in. So garbage in, garbage out, favorite saying, but it's so true. And you want to be able to have good books to be able to process and pay your taxes on. So you're not overpaying in taxes, which we've had some clients that this has actually happened for. So in short, it's essential for your firm's integrity, stability, and profitability to have good, clean books. So let's break down the core steps for a smooth year-end close. So the first thing you want to do is you want to reconcile all your bank accounts. Operating, trust, if you have a payroll account, IOLTA, if you have one or many. You want to also reconcile credit cards, loans, advanced client costs, one that you don't get a statement for, but you want to make sure that you reconcile that because could be fees up there that you'll never collect back from the client that you need to book in as an expenditure for the firm. So that's really the key first step, is to make sure every single account is reconciled for the entire year. And you do it month over month. This should be being done monthly, but if you have records that it hasn't been done, maybe you're doing your own books, that's something that you want to address and have happen every month, whether you set aside that time for yourself to do it or you hire somebody to do it. It's very important. The second thing you want to do is you want to review your accounts receivable and accounts payable. I can't tell you how many clients just go with the flow and they ignore their accounts receivable and it begins to grow. I've seen some upward to $1 million that are just sitting there and nobody collects the funds. So it's really imperative that you look at the accounts receivable, write off what you'll never collect on, small amounts. And then with accounts payable, you want to also take a look at that. If you have bills being entered and you're paying it, even if you're cash basis, you might have billing, you're using AR and AP. Cash basis usually is applicable at the end of the year when you do your tax return. You want to ensure all your client invoices are issued and outstanding ones are tracked and vendor bills are accounted for. So it's key to have a good, clean record and a good, clean set of books. This is a time of the year that you want to clean all this stuff up. So it's pretty important. The third thing you want to do is adjust your journal entries. So there could be transactions in there. I've seen some things that tax professionals have done in files where I'm like, why did they book this to undeposited funds that'll never get off the books? Or why did they book an entry to a client named after the law firm because they needed to adjust the accounts receivable? They didn't know how to do it, and it just stays on there. So those are things you want to look at with journal entries. If you do your books on an accrual basis, you want to book in your accruals or your deferrals. But check your tax return, because if you're doing your taxes, most law firms are doing it on a cash basis. Look at the tax return. It's on the first page. See what kind of basis you're using and stick to that when you're looking at the records. Make sure at the end of the year you're looking at it toggle to cash instead of looking at it as accrual. Although I like to look at accrual all year long because I like to keep an eye on how big the accounts receivable balance is. Most of the firms I work with don't have a big accounts payable. They tend to pay everything on a credit card, or they handle that in-house. Another thing you might see on your records, when you toggle that to cash basis, you might see unapplied cash payment income and unapplied bill payment expense. That usually occurs if you've got credit balances on your accounts receivable. Maybe a client overpaid their bill and they've got sitting there with a credit. And a lot of times you want to look at that as a firm. If there's quite a bit of money there, you might want to talk to the client, refund it to them, or maybe move it into trust. That's a tricky transaction, but you really want to make sure that you put it in, get that off the books. Also, it can be just a matter of somebody did the invoice in Clio, for example, dated the invoice October 1st, but the money was received in QuickBooks on September 30th. That's going to throw it into that unapplied cash payment income because how did a client pay an invoice before the actual invoice was created? And that's just a dating issue. But it's something you want to look at. It's something that you may see. So law firms do face unique hurdles, and managing client trust accounts is probably the biggest hurdle. These have to stay separate from operating funds, and I like to present them on the screen with sub-liability accounts so I can see every single client account and pull up a ledger on all of them. Very helpful to have as far as setting and laying out your data that way. If you end up getting audited by even a random audit, you're going to be able to pull up that information that they need within that really quick turnaround time that they give you. So it's important. You want to do regular reconciliations. It shouldn't be waiting to the end of the year to reconcile the whole year. And just do that to avoid any legal or ethical problems. You just don't want that. Contingency fees and retainers can complicate the revenue recognition, and revenue recognition is always tricky with attorneys. So it's a dating thing. You want to make sure that the work is done, the money's received, it goes into trust, and then it's the work is done, and then the money comes out of trust to apply to the invoice, and then the client gets it into their operating account as earned revenue. Very important that that's done in the right order and that the money actually physically moves. We see a lot of times where we look and there's a lot of money sitting in undeposited funds because the client didn't move the money over. You have to move the money over. And if you're looking at your records now, it's hard to make it move over for last year, but you want to ensure that you actually make those transactions, those transfers, and then make sure it's booked into the accounting properly. And don't forget things like overhead and salaries, obviously big one, billable hours. Look at that, look at the rent. You want to make sure that all of those things are basically in the books, but also look at them overall, making sure that you're hitting your benchmarks and that everything looks like it's supposed to. If you're a bigger firm, take a look at the billable hours, make sure that your team is actually billing out what they should be, and then they're not holding that back or not billing. That's another important piece. So to make this easier, try to adopt best practices and maintain consistent bookkeeping all year. Don't hold off till now to get that done. So you want to do regular reconciliations, even if your state bar says do them quarterly, still do them monthly. It's a lot easier to figure it out when it's monthly. If something goes awry or somebody puts money in the wrong bank account, you want to ensure that you've got that in place to catch those errors. And then you want to detail or lots of notes of what happened wrong so that if you do get audited in that little snippet of time, you've got that little diary to tell you what happened. So I would create a detailed year-end checklist covering every task, make an SOP on this, and give the assigned responsibilities and deadlines. So you want to make sure that it's all in place. And then invest in training and communication. So ensure that everyone on your team knows these procedures and stays updated on regulations. That's another key thing. A lot of these regulations change in January, rules change, procedures change. Check your bar to see what's happening in your local jurisdiction. And invest in the training with your team and make sure that they know all the procedures. They understand. And training can be just a fact of they're working in Clio, but they've never been trained in Clio. Get certified in Clio. There's an admin certification, and you could take that just to learn how things are presented and how to work in Clio within Clio. And it's always helpful to know your software. So technology is a game changer. Use legal specific accounting software like QuickBooks or Xero to automate your invoicing and your expense tracking and your reporting and to reduce errors and save time. But you don't just want to use those two products. You want to layer on that legal tech, whether it's Clio or Lien Law. Those two are the best. They integrate the best with QuickBooks and Xero. They also make life easier to give you a professional presentation to a client. And with Clio, you're also getting all the pieces involved. So you're getting that secure portal to communicate with your clients, to exchange documents. You can have deadlines set on your calendar. There's just so many features I wouldn't even be able to cover in this video, but I highly recommend Clio if the one our firm recommends the most. And you want to make sure that they integrate well with your accounting software and any case management tools that you're using. And you can track your billable hours there. So it's really important for those things so you're not missing time. A lot of clients don't like to pay for the software, but I'll tell you what, the software will pay for itself. And then really, I highly recommend if you want to be a firm of the future, you should really get with Clio and get the AI that's included. I think it's called Vincent. It was called Duo. Get the AI piece included in your subscription because you don't want to miss out on that. It's an amazing part of Clio that they've invested a lot in and they're very excited about. They're going to be the leader in this. And of course, at year end, you want to focus on the taxes. You want to talk to your tax professional. You want to make sure you record and categorize all your deductions, your rent, your salaries, your professional development, anything you spent money on. You want to have time revenue recognition correctly, especially if you're on cash basis. It's now we're in the new year, so it's hard to backdate things, but try to keep organized documents for easy filings or audits. Financial statements are the payoff of all of this work that we're doing. The balance sheet is going to show your assets, your liability, your equity. It's kind of like the lifeblood of your file. Income statement is going to reveal your profitability for that year or snippet of time. And the cash flow statement is important as well because it's going to track cash movement. So together they're going to help guide you with your financial planning. Mastering all of these year-end close procedures will ensure compliance, it will ensure accuracy, and it's a strong foundation for growth. Stay organized, use technology. I can't say that enough. Use technology, train your team, prioritize your ongoing bookkeeping, maybe hire a firm to do it. Start now. Review your checklist, create the SOPs, update your software, prepare for a stress-free close. Your firm's future success depends on it. Thank you for watching this video and subscribe more for some more tips and tricks. And if you're interested in joining our Accountants Law Lab to learn more about how to do this kind of work, there's some links below and we'll see you all next month. Bye now.